What's happening? Okay, so I'm saying this. Most of my time I do trade using the breaker block and fair value gaps. Then I've said before, I have some students who haven't taught them one on one, or they have not got my videos, or I've not taken on them one on one session because of 1 to 3 daily activities. But I'll do this week now. So if you can see at this point here at the volatility 100 index, you want to see there is a fair value gap and a breaker block conjunct, like it is together, it is joined together. You're seeing this is a breaker block. So a breaker block is used to supply liquidity, like it shows the liquidity. For example, if you're driving and you see a sign of two small kids crossing, like at the other sign, it will tell you that there is a maybe a crossing, zebra crossing. If you see H, maybe that is an hospital. It's just a sign to tell you that there is an hospital around. So if you're hooting, you know what to do. Now at this point, if you see something like this, a fair value gap and a breaker block together, it want to tell you that the market should reverse to that point. Are you together? Now at this point, I'm seeing a breaker block. So a breaker block happens when the market takes the low and takes the high at the same time. If for those who have been teaching about the trend, whenever the market come and respect the high, like this point here, this is an uptrend. I mean a downtrend. This is a downtrend. Hope you can see that it's a downtrend. So this market should respect the high. Break the low, respect the high. Are you together? So what happens when the market breaks the low and also breaks the high? Like this point here, the market breaks this low. Are you seeing this low has been taken, and instead of this market respecting this high, what did the market do? It broke this high. Are you seeing? So this is a breaker block and there is a fair value gap. So that means the market should retest from this point. Are you together? The market must give a retest, like something at this point. So, and that's why this market, are you seeing here, there is a breaker block here in conjunction to a fair value gap. Are you together? So whatever the market will do, it wanna come to our fair value gap here, and it wanna show some reaction. Are you together? And that's why I've been waiting for this market to come to that point here. I'm not saying that the market we wanna buy from there 100%. You're looking for entry confirmations for you to buy that market. This is an outer scale of how the market is representing itself. Are you together? Now, when we go to the lower time frame, like let us go to H4. Under H4, what are we looking for? We are looking fair value gap under that fair value gap. And our FVG, it's where another fair value gap under this fair value gap, it's here. I'm seeing another one here. It's there together now. So we are anticipating the market should come to that point. Then we can look for buys. No problem with that. We are waiting for the market to come to that point. If it wanna hit our point here, we look for buys. So we keep on waiting and see how the market wanna behave if it reaches that point there. So let me try to zoom out kidogo. So this is my point of interest. If the market wanna come to this, if it wanna touch this point here, I look for key confirmations. That means I look for an uptrend setup. How is an uptrend setup shown? It's like this on the lower time frame, and I've been teaching you for a while an uptrend setup. This is how an uptrend setup looks. So I'll look for this. Hope you're together. I'll look for this kindly. I'll look for these things. This is what I'll look. The market has done what? It has broken this high, respect the low, broken the other, broken this high, respect the low. Then if it comes to my fair value gap, it must leave a fair value gap here. So this is my entry. So this is your entry confirmation under lower mini time frame. So your entry should be here. So you can screenshot that. So this is your entry. Break of that high. This is showing you on the lower time frame that the market is going bullish now. That means you can use it on maybe M15 or M5 for you to enter that market. Are we together? Hello, are we together?
Yes.
Now let us go to another time frame. This is, let me pick of another market that it happens. That's the same way that we had done before.
Before you go to another, I have a question.
Okay, come on. Okay, I'm back there. A trend line. This one, I was just trying to explain the thing. Okay. Uh-huh. 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 Here. No, there is no fair value gap. A fair value gap takes between three candlestick, and this candlestick, it has not. Yeah. Uh, okay. Okay. So what was the question about this trend line? This is a weekly. What do you say? Weekly time frame. And weekly time frame, if you can use weekly time frame, that means it wanna take you a lot of time and days, a lot of days. I get my point, and that's why people use higher time frame to just get the bias, the direction, where is the market heading to. Then after getting that, you can wait for maybe 1 day or 2 days. Then you know what you can do. You can't just use this one. But if it wanna break, you wait for years, for months, bona. So like for example here, if you can wait if it breaks, this is like maybe a lot of days here. Let me say like 5 days. Uh-huh. 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 Okay. I've said this, the breaker block, it's combined together with my fair value gap. If you are very keen, you can see this. You see, this is the breaker block. So this breaker block, it is conjunction with this fair value gap. though it's not giving a nice thing, but it's in conjunction with this. So we are using this fair value gap, and that's why we have drawn this fair value gap from the daily. This is the daily time frame, and it has hit our daily. Let me draw. It has hit our daily fair value gap here. If you are very keen, you have seen that it has tapped inside. It has tapped that fair value gap. Are you seeing it? It has tapped that fair value gap. Now, whatever you do, you go to maybe to H4 or H1. You look for another fair value gap that is inbound between. So that point, or you can go to maybe to M30 and look 50% of that fair value gap, or a 60 something percent, around 23%. But without any contradiction, you can look for an order block that is within that fair value gap. And my order block is here. This order block, I think this was tapped, I think here. This was tapped, but anyway, I think here. And that's why at H4, I came down and pick another fair value gap that is in between that fair value gap, and I took it to here. There. Yeah, I took that thing to there paka hapa sasa, nilileta paka hapa. So to be precise, what I'm trying to say is you're looking under that daily fair value gap, you're looking at 50% level, or a fair value gap in that fair value gap in the higher time frame. You getting my point? So that's how I'll be waiting to see how the market react. I think the moment this market wanna just tap this point here, because it's already in the daily the daily fair value gap, so it has already tapped that point. So I'm waiting to see if it wanna tap that point here, then I'll start doing what? I'll start looking for buys. Just a few pips away, very few pips away, because my point of interest is here. I want to see the market coming to 1287. So I can set my buy limit at 1287. 1287 should be my buy limit. Then I look for, maybe I risk $10 to get $20. Or if you have a $20 account, you can set $20 to get $40 account. That's how it is. Okay, so I was trying to show you another market of volatility 10 index of how it performed using that way of analyzing the market, and that's how it is, by the way. So under the daily time frame that I'm trying to tell you is let me try to zoom in kidogo, and if you're very keen, there is some fair value gaps here. There are some fair value gaps here. There are another fair value gaps here. If you are seeing them, okay, there is no another fair value gap along this leg. Now let us go to H4. Under H4, let us use this one. The moment the market came to our fair value gap, I'm seeing this an imbalance. This is like a pin bar, this point here. So most of the time the market wanna react at that an imbalance, that pin bar. Like the market wanna react most of the time, and that's why you have seen on my volatility 100, I've marked that pin bar here, this point here, 1287, this point here, as my point of entry. The market most of the time wanna react at that pin bar. I don't know if you're very keen on what I'm trying to say. So the market wanna react to that pin bar, and if you can be precise, the moment I'm seeing another fair value gap under that point, but it never came to that fair value daily fair value gap that I'm trying to see. But let us go back to the daily and return it to where it is. You see, this market reacted from this point, and that's what I'm trying to say. The moment the market taps that daily fair value gap, let me delete this one first, the other one, because zimekuwa mingi hapa. Let me work with this first. So whatever I'm trying to tell you is the moment there is a daily fair value gap there, you can look any order block along that leg that has not been mitigated, or any fair value gap that is in between. This is the daily. I've been using a lot of strategy to show you guys. Now hii ni a daily fair value gap, using daily fair value gap for an entry. So along that way, any order block that has not been mitigated, I'm seeing here this one here, that is combined with this fair value gap. So let me try to fill this one. That is a very bad color. I don't know if it's visible. Now, there is a fair value gap and order block along that point. So this should be your point of entry. Now, at this point, entry yako ni hapa tu, nothing more. Kuna order block ndio hii na fair value gap. It's not mitigated. So this is your point of entry. The market must retest that point. So you are 100% sure that the market should come to that point. And for those who doesn't understand this, I have a 24-minute video I'll share to you, so you can see how the market did. The market, it react from that point. That's how it is. Same to volatility. This volatility 100 that we're trying to enter right now. Whatever you wanna do, you wanna come to, like, let me say H1 and look for an order block around. I'm just seeing a fair value gap at that point. I'm not seeing a nice. Yeah, there is an order block at that point here. This is an order block combined with this fair value gap. So actually, the point of interest is that it's just at this point. What I'm trying to show you is to be precise, like to get sniper entries. What I'm trying to say is, but our point of interest is in this fair value gap. The moment the market has tapped that fair value gap, you're good to go. So what you're just looking here, you're just getting, you want to get zero drawdown. You're getting my point? Whatever you're looking here is just getting zero drawdown. So this is where the market wanna tap probably, and the moment the market is into my daily fair value gap, I'm just preparing to look for myself. Buy confirmation. Nothing more. Nothing more. And if the market comes, let me tell you, if the market comes and break below this fair value gap with a body, this fair value gap is done. We can't use it again. So our setup is null and void. Hope you are together. Hope you have understood something. So use the daily fair value gap, then use your entry confirmations on the lower time frame. Break of structure, 2 break of the highs, maybe under 15 minutes time frame. Then have a fair value gap that has left behind there. Then enter that market. Stop loss below that daily fair value gap. Take profit. Know how you can set your take profit. And I think most of you knows how to risk management. You know the risk management. Unajua kuweka to set your stop loss and take profit. You know it. So that's how it is.